chip stocks taking a hit today after Samsung reported that its second quarter profits likely fell more than 50%. Let's get to Deirdre Bosa down at the New York Stock Exchange with more on this. Deirdre.
Hey, Melissa, that forecast was actually better than expected thanks to a one-time gain, but pretty ugly otherwise. As you mentioned, Q2 profits likely fell over 50% as Samsung grapples with a chip market that's being hit by a double whammy of surplus supply and slowing demand. Now, the broader story here, though, is about Samsung's year of slowing profits and a global supply chain that is being hit by trade tensions. Analysts say that the trade war and the U.S. export ban on Huawei has hurt global demand for memory chips. If restrictions stay in place, that could pressure chip prices even further. There's also trade tensions between Japan and South Korea, which could be yet another headwind for semiconductor firms. Overnight, South Korean chip makers LG and SK Hynix, they got hit harder than Samsung. And today you see American names like Qualcomm, Micron, and AMD being dragged down. There could be a silver lining, though, for Samsung. While memory chips are its biggest business, it is the #1 smartphone maker. So even though Galaxy S10 sales have been sluggish, Samsung could actually benefit from Huawei's pain. Remember that Huawei is the #2 smartphone shipper. The idea is that if Huawei sells less phones, Samsung could pick up some of that slack. Now, Samsung also makes components for rivals in device space, and it is ramping up its 5G network equipment business. Other chip makers, though, they don't have that potential upside, and so they await revived trade talks next week. Back over to you, Melissa.
All right, Deirdre, thank you. Deirdre Bosa at the New York Stock Exchange. So we're awaiting the resolution of trade and this sort of lifting of the ban on Huawei. It's very unclear as to whether or not chips will actually be able to supply Huawei anything at this point. We don't know how that shakes out.
It's not a peace treaty. It's truce in the short run. And this is a perfect storm for Samsung, who's getting hit on all sides. Even Japan has thrown export tariffs on them in terms of 3 core ingredients that are restrictions upon them that are used into making memory chips. So if you think about the memory dynamic, you think about the smartphone dynamic, you think of the Huawei dynamic. Having said all that, Samsung has underperformed triple Qs by about 40% in the last year and a half. I actually think this is one of the best companies in the world. And despite these headwinds, I think the market has priced in an enormous amount relative to the peer group. At least within the peer group, I'd rather be long Samsung than be long a bunch of other chip players at this point.
Such as, I mean, I just wanted to long Samsung as opposed to long Qualcomm, as opposed to long Broadcom.
I think, leaving aside, and Qualcomm's a bit dangerous because of both M&A dynamics and some of the legal dynamics, which could work for or against you. But certainly in terms of a Broadcom, certainly in terms of even an Intel, which is a name I like, but I think Samsung's overly beaten up, and that diversity in terms of their business model is why it's interesting.
Mark.
So I like NVIDIA here. NVIDIA gives us exposure to all those high growth end markets that we want to play, whether it's AI, autonomous vehicles, data center, gaming. It gives us exposure to all of those. They had some crypto problems. They've kind of cleaned that out. I think it's priced priced at a really good level right now. I also like Broadcom as well. So Broadcom, gives you some exposure to the software space with their recent acquisition. So we do like software over semis right now. You have access to the software revenues as a diversification play. So we like that one as well.
I mean, AMD has outperformed. Intel, to Tim's point, has underperformed. I would say that you have to take some profits in AMD right now, even though there's been a bunch of positive headlines and rumors about being involved in next generation Xbox and Microsoft cutting Intel chips, adding AMD. I think you got to lock in your profits. I think it's up close to 70%. I don't know if I have that number right. It could be plus or minus 10%, but it's up a world. So I think take profits there. There's a lot of other spots in the chip market that I don't like as well.
What's the best chart in the chips?
I would think it's AMD. NVIDIA's trying to bottom. But now, you mentioned something that's, of course, important. It's back to safety versus offense. You like software better than semis.
I do, yes.
That's a very defensive posture.
Correct.